Some tax reminders today on the College Investor Audio Show. Woohoo! Thanks so much for stopping by today. 8 last-minute tax reminders for 2026. You can see this article, links, resources, and everything at thecollegeinvestor.com. Also, ask any questions you have if you want some help finding some good tax software to use for your taxes. We got all that stuff, too. Follow us, like us, all the things on social media. Just type in the words, The College Investor. You'll find us. Pretty much anywhere you are, we're there, too. That dadgum tax deadline is almost here, so here are some last-minute tax reminders if you're still kind of working on filing your taxes. Although it might not be the most enjoyable task ever, it's a necessary obligation that we have to undertake every single year. And if you use great tax software, filing taxes doesn't have to take as much time as you might dread. But filing time isn't just about filing returns, all right? So there are things you can do today to help you save money on your tax bill and also help you save time on filing. Just a win-win. So here are the best last-minute tax tips to consider this season. First of all, don't miss the deadline. That would be bad. The official tax deadline, as it is every year, April 15th, 2026. A normal year for the first time in a while, actually, because if it falls on a holiday or on the weekend, all that kind of stuff, whatever. But there are a few exceptions to this if you live in a disaster area this year. And you can check out, actually, the list of tax deadline extensions from the IRS at thecollegeinvestor.com. Most states that charge an income tax also require that the tax be paid by April 15th. However, there are a few states that have later filing deadlines. Double-check your return before you file. As you scramble to get to the finish line, don't rush through the important details. A mistake on your form can lead to major headaches down the line. Every year, we read horror stories about people who accidentally mistyped their name, their address, or their number. Ugh. While tax software can help spot obvious errors, it can't catch some mistakes like entering the wrong bank account information. So don't rush. Make sure to file with the correct Social Security number and include all of the necessary signatures. We also recommend reviewing different sections of your return to ensure you haven't made a major typo. For example, 10 separates $8,000 and $80,000, right? So if you mistype one value, you could under or overestimate your income, and this type of error could delay your tax return from being processed. So as you file your return, take advantage of opportunities to review your numbers. Double, triple check that they actually make sense with your actual income. This is really easy to do if you use software like H&R Block Online, which offers section summaries for income, deductions, and credits. All right, next thing we'll talk about, make sure you have all of your forms. Might sound obvious, but really you just have to make sure. Most people settled into a new norm in the last year. It's still been remarkably tumultuous, right? You may have claimed unemployment, received state stimulus checks, had a side hustle income, or other atypical forms of income. These are a few tax forms you should not overlook this year. The 1099-G, which would be unemployment income. So 1099-G forms provide information on unemployment income and whether taxes were withheld from that income. While employment numbers are currently strong, a lot of people started 2025 unemployed and they need to claim that income. So if you didn't receive this form, you might need to go to your state's website to find out how to request an online copy of the letter. 1099 NEC, forms reporting non-employee income. So the 1099 NEC reports non-employment income. Filers with this type of income are considered self-employed, and they might be eligible for all sorts of self-employed deductions. If you earned more than $600 from a single business entity, they are supposed to provide you with a 1099 NEC to you. If you're waiting on some late forms, we have a guide you can check out at thecollegeinvestor.com to help you out a little bit. File your taxes even if you owe. This is huge. Even if you owe money, you want to file your tax return on time. Interest on late taxes is a reasonable interest rate, but non-filing penalties are steep, and it increases the rate you're going to pay on overdue taxes. Just don't do it. Getting your taxes filed will also help you nail down how much money you actually owe so you can make a specific plan to get your back taxes paid off. Seek out legitimate deductions and credits. Great software makes it easy to claim legitimate tax deductions and credits. Great tax software makes it easy to itemize deductions or claim deductions for student loan interest or charitable gifts. It also helps you find credits like the Lifetime Learning Credit or LLC. This credit is worth up to $2,000 per return. It can be used to cover qualified expenses for eligible students. Then the Savers Credit is a good one. Depending on your income and savings rate in qualified accounts, you could qualify for the Savers Credit, the American Opportunity Tax Credit, AOTC. If you're still an undergrad, you might be able to use this credit to lower your tax burden. Credits are always better than deductions, by the way. The Earned Income Tax Credit is the EITC. If you have low to moderate income, you might qualify for this one to lower your burden. Don't forget your self-employment expenses. These are huge. Whether you're a full-time freelancer, side hustler, you likely have some form of self-employment income. And most forms of self-employed income are accompanied by tax-deductible expenses. Before you file, comb through your electronic receipts to find expenses that count as tax-deductible. Some of them include a portion of your internet costs, website maintenance, educational materials, any direct costs of goods sold. If you do ride sharing, gas, miles driven, all big things. You might be surprised at the sheer number of deductible expenses to be found inside your side hustle. Recording all these costs allows you to claim them on your return. H&R Block Self-Employed Online explains some of the legitimate deductions, so you can look for these expenses in your past credit card statements and some other records you have. If you're a side hustler, and if it's quickly becoming a full-time hustle, mine did a few years ago, you might consider looking at getting professional help. H&R Block has tax experts that can help you with any situation imaginable, from filing your taxes this year to getting the help you need to set yourself up for success next year. It's not just H&R Block. There's a lot of different software that has experts that can help you. You can find all the lists and all the things at thecollegeinvestor.com. Claim your flexible spending account, your FSA expenses. A lot of employers offer dependent care flexible spending accounts, health care flexible spending accounts, and other deductible spending accounts. Money in your FSA is yours, but it's up to you to claim it, though. If you don't claim the money by tax time, you probably will lose it in those accounts. Just claim the thing, even if you set aside the money yourself. If you're lucky, you might have a few weeks remaining to spend the money in the account. Stock up on contacts. Get your teeth cleaned. A wisdom tooth removed. Find something. Do whatever you need to do to use up that money. Don't do frivolous stuff, but you know what I mean. Then submit your receipts so you can get reimbursed. Even if you can't keep spending, you may still be eligible to submit receipts for reimbursement. Every employer has different rules on this regarding their FSAs, so check with your HR rep to figure out what you need to do to take advantage of these funds. Contribute today to an IRA or Roth IRA. So an individual retirement account, IRA, is a tax-advantaged investment account designed for retirement, of course. People who contribute to an IRA can claim a tax deduction this year for funds contributed. You have until April 15th to do this. The funds can grow tax-free until you withdraw them during retirement. There are income limits, of course, with IRA contributions, and the maximum you contribute for the 2025 tax year is $7,000. It went up. $8,000 for people age 50 and up. Contributions are not due until tax day, so this is just a great way to save on your taxes this year. Roth IRAs are similar to traditional, but they don't allow you to claim a tax deduction this year. Instead, you pay taxes on your contribution this year. Then, the gains and distributions are free from taxation at retirement. It's a game changer, by the way. If you're like, I don't want to do that, I don't want to get the deduction this year. Think future and figure it out. No taxes on that money later is awesome. Even though you don't get a deduction, you do still have to complete your 2025 Roth IRA contributions by April 15th, 2026. Quick note here, You can also contribute to your HSA, your health savings account, for 2025, all the way through April 15th as well. The bottom line here, as you move toward the end of tax filing season, consider taking advantage of these last-minute tips that can save you money right now. The tips here can help you if you're considering a DIY approach to filing your taxes. However, generic tips are not a substitute for help from a tax pro or a tax filing service. Professionals can help you with tax prep and any questions specific to your situation. That is our show for today. You can see all the links and resources inside this article at thecollegeinvestor.com. Also, on social media, just search for the words The College Investor and you'll find us. We'd love to help you, whatever you're doing, wherever you are in your money journey. Thanks so much for stopping by today, and we'll talk to you again real soon.